our schedules that we can have available for trading. And we have identified how much we have to trade with. And we've broken that amount into how much each trade will have. So what's the next question? What do we trade? What do we trade? There's many ways to trade. And believe me, the hardest thing for you to understand, especially those of you that are new, and it might be your first time logging into the chat room, first time hearing me speak right now. The hardest thing for you to maybe understand today is that I can't teach it all to you in one night. But I can tell you, my alerts are very simple to understand. They are very simple to understand. And it's pretty easy to get a hold of me if you have questions. So where do you get started at with making your own trades? Well, it is a statistical fact that 90% of day traders, those who start day trading, are broke within a year. So if you're broke within a year, if 90% are broke within a year, and you happen to be broke within a year too, does that make you a bad trader or does that make you average? Yeah, it makes you average. 90% of people that strictly day trade go broke within the first year. Whereas swing trading, which is actually shorter term trading, I'm going to show you an example of a swing on a chart. The swing is the move being made. A swing trader's goal is not to have a deadline on how long they will be in a trade, but a goal to catch as much of an individual move as possible. What do you think the likelihood is of you catching the exact bottom and the exact top? What is the likelihood of that happening to you? So low that you shouldn't count on it. So low that you should never count on getting the exact low and the exact high. As a matter of fact, where you should revert your focus is to finding a way that you can consistently catch 70 to 85% of that move. Where you can consistently catch good portions of a move. But a swing is defined of the overall move in a chart. Now I want you to look over here, for example, right where my crosshairs is. We got a green candle, a green candle, a green candle, a green candle that went down really far at the open, but it's still green, and then we got a red one. Just because we put in a red candle, is the swing over? For the foolish trader, it is. Because they sell on a red candle, or they sold on the gap down here, only to find that it's not over. Is the swing over when this red candle was made here? So one thing I want you to look at, and this is going to be the easiest tool you could ever use, that I can guarantee you will never get you the low and never get you the high, but will limit your losses and losing trades and get you in those winning trades for a majority of their move. And for those of you that are new to trading, and those of you especially that cannot sit here all day with me, this is the type of trading you need to be starting out with. For one of you that's working in 2 different accounts, this is the way we're going to start with your smaller account. And just like the statistics show that 90% of people that begin day trading are broke within a year, just slightly over 70% of swing traders are still in the game in that same year. So I'm gonna pull up a chart here, and I'm gonna edit some things. You know, when you look at a chart, a lot of people overcomplicate their charts. They put all this crazy crap on their chart, and what you find is more reasons not to trade than to trade. So one thing I want you to understand, and a few of you, I already told you this through emails, is that first week you're with me, trading should not be your priority. Learning should be. Week 2, small trading and trade planning. And then we get running into this, okay? Because let me tell you, by doing those other things and taking the time I'm asking you to do, it doesn't, well, you're going to hose me out of my whole first month of membership. That's not the answer. I'm going to teach you the confidence that you need to do this, where within that last 2 weeks, you'll easily pay for your membership. And then you'll want to stay, just like everybody else has. So I don't want you to overcomplicate your charts. So I'm going to go to this chart. I'm going to make a couple changes to how my chart's set up here. You're going to see me turn something off. And then I'm going to come over here and I'm going to edit these studies. And I'm going to turn every study off. Study meaning an indicator. I don't want you overcomplicating your charts when you start out. I'm going to teach you how to overcomplicate your charts in time, but not view them as overly complicated. So we don't need any of these indicators. We don't need a single one of them, except for one. It's going to be a simple moving average. So, when you open your brokerage account and you open your platform for the first time, you can put in there to add an 8 simple moving average. An 8 simple moving average is going to be an average of the close of the last 8 periods. So if you've got it on a daily chart, it'd be an average close of the last 8 days. Now, I'm going to take you to a simple chart. How about we use INTC, because I talked about that one not long ago. I'm going to delete the drawings on here. And I want you to look not at the red and green candles, but look at that yellow line. And tell me if you see something about the yellow line over the last year that doesn't necessarily mean you wouldn't have had a losing trade, but that the losses would have been small and you'd have had some big winners. What do you see about the yellow line? No, not just that. Well, let's just look at it. And here's the answer I'm looking for. When it started moving up, it rarely, if ever, only moved up for a day, right? It would continue upwards. When it started moving down, the stock was going down, meaning it didn't just go for one day. There might have been a couple times, a couple little instances, but I'm looking at, when you find a chart you like to swing trade, Your goal is to catch every swing on it, not just one swing and go, woohoo, where's the next one? You want to master that chart. Now, let me use something really simple to outline this. If I were trading this moving average, when the line started pointing up, from the time the line started pointing up to the time the line started pointing down, I would have basically entered somewhere around 1950 and would have been exiting, we'll say around 21 bucks. That doesn't sound like a big gain, 1950 to 21 bucks, but in an options trade, that's probably going to equate to anywhere from 30 to 45%. Depending on the option you're trading, it could be 60%, 70%. And if you look to swing trade stocks that you can see this 8 simple moving average moving pretty fluidly, both up and down, what does that help you develop when it comes to the chart and the consistency in trading patterns? What would it help you develop? How about trust? How about trust? Literally meaning, on a chart like this, that if I were to enter, we'll say calls for options trading, if I were to enter the calls when the line started pointing up, and I were to sell those calls when the line began pointing down, over the course of a year, I would have produced more winning trades than losing trades on this chart. You can pretty easily see that, right? You can see that as it started going up, it started pointing up here. It still was going up for 1, 2, 3, 4, 5, 6, 7, 8, 9. 10-day, it flattened out. 11-day, it went down. Very easily. Very easily. In making these swing trades, it's think or swim, and it's the 8 simple moving average. If you, at a later time, Aaron, go watch my video, my Think or Swim video in the lesson library. It'll tell you how to set this platform up exactly how I have it. Oh, sorry, I didn't know that was set to weekly. It was meant to be set to daily. Even on the daily, if you look at this, the line is still consistent. It's actually even more consistent on the daily with the up and down moves. Do you see that? Very simple with the up. Look at this. It's going up. Is every candle a green candle? Look at this area here. Is every one of these candles a green candle? No. Nope. But is it safe to say that had I entered the trade as the 8 moving average began curling up, if I had done it every single time over the past year, that more times than not, I would have had a winning trade? Well, there would have been one because the sell, when it started pointing down, was higher than when it started pointing up. Here, this one might have got you. Here, this made up for it. That's a huge winner, isn't it, in options? Here, another winner. As it started going down, I can make money when my stocks go down with options. Without just shorting, I can play the puts. Here, winner. Hey, here could be another winner. and I could play both sides of this stock. Playing both sides of the stock allows me to do what? Playing both directions in stock movement allows me to do what? Two answers. What are they? Two answers I'm looking for. What are they? Make more money, watch less charts. Make more money, watch less charts. Right? I can literally always be in a trade. The only time I'm not in a trade is consolidation periods, which as I get to know those charts, I'll get to know the consolidation periods too. So now I can devote my life to a small group of stocks and I can swing trade those. You see, what makes you a successful swing trader isn't how many random stocks you can find to chase and catch half of a swing on. Okay, I'm not Jason Bond. I don't care about my ability to chase swing trades. I don't care about the fact that he sent out an email to over 100,000 people bragging about buying PLUG 60 cents higher than Sneeb alerted it to all of you at. And then selling it on the gap up and sending out emails bragging about it to 100,000 people. I'm not Jason Bond, and I'm not going to brag about chasing a swing trade. What I want is for you guys to be able to find a very small group of stocks that you like. And with your swing trading, just one of the tools you will develop in your arsenal for that war against Wall Street, you're going to learn to trade up and down and up and down and up and down while getting to know just a small list of stocks. Where do you think you could find the best list of stocks to start out doing that on? Where do you think you can find that list? Focus group. Because every stock on that list in the focus group was put there because that 8 moving average literally gives you regular up and down and up and down, where all you got to do is follow the line, and you'll have more winning trades than you have losers if you follow the chart and stick with it. And now you don't have to randomly search for charts in a wide array of stocks, tens of thousands of them being traded actively in U.S. markets. Can you do this type of trading working a full-time job and not being able to watch them all day long? My answer, you'll probably do it better than the people that watch it all day long. You will probably do it better than the people that watch it all day long. Why? Let me give you an example. When these stocks happen to get moving, and I want you to look at this day right here. You see this? It's called a lower wick. See that wick below the open and close price? Well, at some point during the day, on that day, it was a big old fat red candle. It didn't become a wick until the price moved back up. And somebody watching it all day, 90% of the time would have sold. You come home from work, glad I wasn't watching it, or I'd have sold that. You could trade this type of trading system easily, repetitively. Are you going to catch the bottom with this type of trading? Are you going to catch the bottom? Are you going to catch the top? Can I consistently say that following something as simple as the 8 moving average, I'm going to catch most of it? I'll catch better than half of every move. Yeah, and this here is bread and butter trading. This is bread and butter trading. This is, when you're starting out, taking what you've built and furthering, expanding on that arsenal you're creating. And plain and simple, regardless of even the alerts I send, if you can be comfortable with something like this, maybe I alert something because I'm trying to catch the bottom. Or maybe I'm trading on Fibonacci's and there's a Fibonacci point, but you're comfortable with this 8 moving average, and you come and you open your chart up and say, you know what? He's alerting it down here. I'm just going to wait until that 8 moving average is moving up. And you know what? Once it is moving up, I'm just going to ask him, hey Mike, do you still like that chart? And if he says yes, well, that'll give me the confidence to like it too. And then I'll join the trade with him. And I could develop this little bread and butter system, the bread and butter system, and I could develop it, and I could develop it. But understand, this line gets its value based on what? The value and direction is going to be based on what? The close, meaning nothing that happens during the actual trading day matters. So how could you do this if you're working full-time? Well, as you look at some charts you're interested in, maybe you're only following 2 or 3 charts. Most people participating in the focus group follow 3 to 5 at the most. 3 to 5. And I think that's a darn good number, because if you think about it, trading a little system like this, you're always in a trade. So it's not about being in a trade, not being in a trade. So it's not about whether or not you'll be trading using a system like this. Now, when you're doing these types of trades, what type of options are you trading? The ones that expire in a week or the same week, the ones that are expiring 2 weeks from now, or no, I'm not even looking for just monthlies. Or does Coach Mike generally tell you which option series we are on for our swing trades? Right now, all swing trades we're entering are which ones? Unless it's stated otherwise, March 22nd, right? And consistently, I put out, we're going to switch all of our new swings to the next monthly, right? Those of you guys that have been with me for a while, I keep pretty up to date on when we switch our entries, right? So when you're trading a system like this, well, you haven't been here since we switched, Michael D. You weren't here when we made the last switch. But you will be here when we make the next switch, because it's coming up very soon. As in, listen to the opening line of my watch list when you get it tomorrow. Hint, hint, we're moving to April this week. Why do we do that? We want time on our side. Less time does mean more volatility. More time means more safety. We want more safety. So if we're looking at INTC and say, well, yeah, that line is pointing up, but it just started pointing up. Every other time it just started pointing up, it went up, a few weeks, couple weeks, couple months, couple months. And we can safely play that. We can safely trade that by trading that standard option swing that I put out. Like I said, right now we're trading March 22nd. Come Tuesday, all of our new option swings will be made for April. I think they're April 17th. I can check that real quick. April 19th. And you can consistently trade those, trade them well, successfully, and within the means that I gave you. On top of that, you stick with those unless I say otherwise. Now, if I give you an alert that says on Tuesday, hey, I'm buying March 22nd, why would you think I'd be doing that? I'm telling you right now, we're switching this week to April 19th. What happens if Thursday I alert something for March 22nd? Why would I be doing that? No, not really a scalp, but it would be, I'm expecting a faster move, and I want the excess volatility. That's why I would do that. I'm expecting a quicker move, and because of that, I want the extra volatility. But that doesn't mean you would have to trade it that way. You could still just say, well, hey, everything I'm trading right now is April 19th. You could set up all your options chains with April 19th. And you could go through that focus group. I mean, you look at charts that we have in the focus group. And if you want to put all that other crap on your chart and overcomplicate your trading, go right ahead. But this way is easy and it's consistent. But, you know, we can look at like Citigroup. Is that yellow line consistent with Citigroup? Up and down and up and down and up and, oh crap, this one might have hurt you. Wait, it actually started pointing down before it gapped down. Cool. Up and down and up and down and up and down and up. Been consistent, hasn't it? Bank of America. It's gone up and down and up and down and up, and this one kind of sucked, and up and down and up and down and up and down. How about FreeportMcMoRan, FCX? It's gone up and sideways and up and a little bit of down and up and down and up and down and up and down and up. Pretty consistent still, even with two sideways times, right? The whole reason, oh, DOW is another one. Over the past year, up and down and up and down and up, a little bit of down, up, down, kind of sideways through here, up and down and up. I can go through every chart on the focus group list. Pandora's had some sideways times. It's a little harder one to play. But 85 to 90% of the charts on that list, the 8 simple moving average is easy. I don't need Bollinger Bands. I don't need all that other crap. Don't overcomplicate the trade. Trade with the line. Line goes up, buy the calls. Line goes down, buy the puts. Sell the calls. Boom, 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 boom. What's the other reason these charts are on the focus group and not LinkedIn and Apple and Google and Priceline? Stock guy, you've been here for a long time. You should have already learned it. The videos are posted. I keep teaching and teaching and teaching. Yeah, you can make proper swings on these and get 2 to 5 contracts with $100. That's the other reason these charts are on the list. And then there's even a few cheaper ones so that you could just do common shares and still trade them. Nope. Listen, whoever tells you that moving averages, bouncing off a moving average, hitting a moving average doesn't make it support or resistance. Moving averages move. If you're going to properly trade a moving average, you're trading the direction of the moving average and not the price in association with the value of the moving average. Look, you crossed this line several times before it actually started going down. Look, as you're going up, you crossed it a couple times, and you were still going up. We're not talking about buying the bottom and selling the top. We're talking about catching most of the move. In the 8 simple moving average, or any moving average, if you're trading it appropriately, how many times do you see somebody use a 20 moving average? They sell because it puts a penny below that moving average, and it comes right back and closes back above it. It's because they don't know how to trade a moving average. When you trade a moving average, you trade the direction of the moving average. Just like if you're going to tell me you use an indicator to trade, like a MACD or a slow stochastics, price shouldn't matter, or you're not trading the indicator. So don't tell me you're trading an indicator if you're not trading an indicator. If you're trading a moving average, you're trading the direction of the moving average and not the associated price. But the 8 simple moving average, this would allow you to work a full-time job, come home at night and say, my 8 moving average is now pointing down. What does that tell you about tomorrow? What are you going to do at exactly 9:30 a.m.? Sell it. Don't tell me that at most jobs you can't take a bathroom break. Well, and it's not always sell and get puts. Some people, like me, really only enjoy playing the long side, the call side. So it'd be sell it and wait till the next chance. Well, Tuesday, you know what I mean. Tomorrow as in the next trading day. Well, but Flyer, in all reality, with trading this type of system, at any time during that day. Because nothing throughout the time, the actual trading day really matters. It's the close of the day. Now, does that mean that there won't be maybe one in every 100 that makes some crazy gapping action and it kind of screws you or benefits you? No, that could happen too. But it's actually such a rare occurrence in this type of trading style that it wouldn't hurt you if you were doing what? It wouldn't hurt you if you were doing what? Proper position sizes. We're learning something, aren't we? Now, this is a very easy bread and butter type system that will allow you to not catch the bottom, not catch the top, but catch the majority of a run, and easily and consistently make some profits so that you could expand your method of trading. Those of you guys that are new, we're going to start looking at charts like this. We don't need any of these other lines. I don't need channel lines. I don't need any of that. I'm simply going to work on trading up and trading down and trading up and trading down. And I'm telling you this, if you stick to a small group of charts and do those trades every time it gives you the opportunity, you'll have those few charts that it's like, I know I'm always going to make money on. So now, I'm going to take some chances. I'm going to make like a little speculative play. It's either going to lose a lot or it's going to gain a heck of a lot. Like when I turned $1,500 into $17,000 on Apple last week. Well, if you follow the focus group charts, Aaron, the point of those focus group charts, or the focus group in general, is to begin teaching you how to trade while having you focus on a very small list of charts so that you can start learning about those charts. And I do make alerts on those charts, but there are a lot of people that are trading way more than I alert and doing really, really good by learning just a small group of charts and a small, consistent method of trading. And like I said, if you find the 3 to 5 of these you like the best and you trade them on a very easy system constantly, you're going to find that you've always got these ones going on. And then you start expanding your portfolio with maybe some day trading, maybe some long-term investments. But you've always got these ones going on. These are your bread and butter. They fund all other means of trading. I've got some people that they have the money to already involve themselves in more types of trading. So guess what these trades do? These very easy bread and butter trades. These are their income. They do these constantly just to send money to wifey, put it in the checking account. That's how we pay the bills. But these types of trades here are how I got people that put $7,000 into a trade a week and a half ago and cashed out with $50,000 on Friday. You know, one of the guys that left a testimonial about the Lockheed Martin trade. You know, a full-time working single mom in Puerto Rico who barely even speaks English, trading this type of thing on focus group charts, and wow, I now have money. Flyer, the number one requirement of it's the same thing I've been saying for 2 months, buddy. Quit trying to randomly search for stuff that's already moved. And focus on a small list of charts. I can't personally catch them all. The same method applies. But if you're only looking for home runs, you're going to strike out more than you hit them. But if you watch DOW, FCX, and Citigroup, 3 charts from the focus group, you trade those 3 charts up and down for multiple hundreds of % on each move in options. Every 2 to 3 weeks. Just based on that line. You won't get the low, you won't sell the high, but you'll probably get a 200% profit every time. Did you see my other chart on Pandora, stock guy? See, some people that struggle in trading love buying things at the high. Look at the head and shoulders currently on Pandora. Why is it a head and shoulders? There's your left shoulder. There's your head. Your right shoulder will be formed if it pulls back from this line. And that line's a breakout point. So let me tell you that regardless of if you think it could break that line or not, you'd be an idiot to buy it before it does. Don't overcomplicate things. Keep things simple. I just told you the easiest way to start trading and start making money.